All right, everyone. Hope you had a good week. Hope y'all are doing well. So I'm going to hit you hard. I'm going to hit you fast here with the Friday recap. And then we'll get into the details of the focus list. A couple of things I'm watching for next week. But a good chart to start with here is the volatility index. So the VIX, the VIX. You can see what happened here this week is you got the big push to +2, +3 ATR to the upside. When VIX is nice and calm down here, it's typically smooth sailing for the market. Once you get these spikes in volatility, typically, not always, but typically a 2 to 3 plus ATR spike to the upside for VIX usually results in the indexes falling to their -2, -3 ATR level. So if you study the chart here, kind of post-COVID, what's been the general theme here is that VIX gives you the big old spike. Then it quickly dies down, and the market is generally kind of moving forward. You get the +3 ATR, you dive back down, +3, you dive back down, again. And as of right now, it's looking like you get the big spike here, but right back down to the 21 we go. So for the next, always as a general statement, but for the next couple of weeks here, keep a close eye on the volatility index. If it continues to kind of stay near or below its 21, I think the market's got a good chance of kind of making a recovery here, which basically it made a recovery here today from the perspective of the SPY and a lot of other sectors. So VIX kind of stays dormant, so to say. That's good for the bullish nature of the market. Should we get another big spike here, my best guess is you see the market roll back towards those lows. So keep an eye there on the volatility index. If we update here on the charts we were looking at on Wednesday from a weekly perspective, S&P 500 still looks rock solid. Stacked EMA'S, green 10x bars, a close above the weekly 8. So weekly structure is super bullish, as it continues to be. And for the Qs, we did get the flush here at one point this week under the 21, which I think is a big level. We start getting weekly closes under the 21. That opens the door for a flush to -2, which on the weekly chart, you're talking just about 12,000. So pretty good flush there. But we did get the big bounce yesterday, big bounce today. Weekly structure is still intact. So the weekly 21, that's going to continue to be a key level of support from a bigger picture perspective. Y'all want to keep an eye on here. But then as far as the daily charts go, here's the major differences. S&P 500 looks phenomenal. Technology stocks and semiconductor stocks, they got a lot of work to do. So the SPY has a good structure where the daily charts for tech and semis, those structures are broken. No more stacked EMA'S. You're under the 21, under the 50. Basically got a squeeze 5 and short here. Now, don't confuse today's bounce with necessarily the time to get locked and loaded in tech calls. Thinking in terms of probabilities, a bounce here makes a little bit of sense. We flushed -2, -3 ATR under the 21. Typically when the market is going to set up for a bounce back to the 21. But you can play those bounces back to the mean. They can be fun. But as far as buying Google, Amazon calls for 30, 40 days till expiration, this is currently a broken structure. Now the weekly chart does suggest, as long as we're above the 21, that we could hold up here, and as soon as we start getting back above the 21, the histogram looks better. You get some stacked EMA'S thrown into the good mix. Then I think you look for tech stocks to the upside. But until that happens, to me, it's a short the pop kind of thing. So look to short at the 21, take profits at -2, -3. You can look for something like that on the Qs. You can look at Amazon, which is basically a mirror image here of the Qs. So that's the Qs over there. The semis, right, same crappy structure. You can go long at -2, -3 with a put credit spread, play the move back to the 21, but I think until it gets a better structure, you treat it, it's nothing more than that. You play the bounce back to the 21, you take your profits, you move on happily ever after. So tech and semis look pretty rubbish here, but the SPY looks really good. So we get the bounce back above the daily 21, which, the bulls kind of showed their hand here. Now, I think next week, if we end up flushing back under the 21, and should that be accompanied with a big old spike in VIX, we're probably going back towards these lows. So look for the SPY to hold that 21 as a key level of support on the daily chart. But the SPY looks good here because while tech and semis are getting spanked, the other sectors are carrying the way forward here. So the industrials, XLI, bullish structure, stacked EMAs, you got the green beans, and you get the dip to the 21, held structure, bouncing back off today. Industrials look good, energy looks good, financials look good, utilities are holding up, transports keep on going, and then healthcare here has a good bullish structure with a daily squeeze. So essentially what you're seeing is tech and semis are getting picked on, while industrials, financials, energies, etc., they're doing just fine, and that's the reason for the market holding up here. So, I think if you're looking for long opportunity right now, keep it simple. Think in terms of probabilities. You can get long Amazon right now, and you could catch the move back to the 21. You're also fighting a daily squeeze firing to the downside. So it's not, out of the realms of possibility. Amazon just throws up next week. So you can make some money there. My advice, my style, is path of least resistance. So I'm thinking I'm going to find something, a sector that's still intact, like the industrials, wait for a pullback to the 21, and then I'm going to look at some of the, the bigger names in that ETF, like a Caterpillar, like a Triple M, like a UNP, and that's where I'm looking to go long. So I do have a put credit spread here in Caterpillar for those very reasons. Good looking chart. I think on a dip to the 21, you can take consideration to adding or starting a position. Then as far as things to short, it's all about stocks that are losing structure. Tesla's a good example here. You still got stacked EMAs in the weekly, so she's being stubborn, but the weekly squeeze has negative momentum. So the histogram is bleeding, red 10x bars. You're under your weekly 21. When you're under the weekly 21 with a squeeze, all the potential in the world, and believe me, Tesla could go back to 900. It's crazy stock. But in terms of structure and probabilities, firing a weekly squeeze, that can bring you to -2 ATR. We're talking 250 here, people. All right? 250 is a good flush. So, with the weekly squeeze looking pretty bearish, the daily chart's falling apart, no stacked EMAs, red 10x bars, squeeze firing short, you short as close as you can to the 21, like we did in the options room earlier this week, selling that call credit spread with the short strikes at 695, and then you take profits where? You guessed it, -2, -3 ATR. So I think Tesla's going lower, but I think it probably bounces to the 21 first, and I'll look to short it there. I still got the short position in old Netflix, and I would add to it on a bounce to the 21. Otherwise, I'm going to hold those June expiration 520 strike call credit spreads. Same thought process. Daily squeeze losing structure, daily chart rather, and then here's the weekly. Ain't looking all that hot either. Weekly squeeze fire short. The old Flickster here could see 450, 440. So to the downside, you focus on things that are losing structure, but bouncing back up to the 21. So we'll cover a few more here in the Sunday video, so I look forward to chatting with y'all then. But here's a little bit of weekend homework, and it's the wrong spreadsheet. We can talk about that spreadsheet pretty soon. Here we go. All right, I got what I'm looking for. So check this out, people. Now, keep in mind, this is an older spreadsheet of mine, so it might not be updated, but you'll get the thought process. Tickers for different sector ETFs, the top 10 holdings in each of those sectors. Tech is broken apart right now, but financials, materials, energy, industrials, healthcare, they got bullish structures. They look really good. My advice is look at a couple of the top holdings in each of these sectors here, and find a couple of good-looking squeezes. And then in Sunday, you can throw into the comments what you found. Obviously, I'll be sharing my focus list, but there's your weekend homework. We're looking for high-probability setups in sectors that still got their act together. And then in the things that are breaking down and bloody nosing, you short on bounces back to the 21. So I'll talk to y'all Sunday. I appreciate you watching. Hope you had a good week, and keep in mind, a good week isn't necessarily making money. Good week is if you get a little bit better, because that's what compounds over time, and that's what leads to some good old profits. So talk to you on Sunday, and if you're interested in subscribing to the newsletter, I'm gonna do the Sunday prep video as always. We'll keep on doing that moving forward. So no changes there, but where those videos are a good 12, 15 minutes long, if you sign up for the free newsletter, you get the premium Sunday video. That's a good 20, 25, 30 minutes long. So if for whatever weird reason you enjoy the sound of my voice, check it on out. Talk to you Sunday.